Okay, let's dive right in. We're talking about a huge strategic shift in the global uranium market, and it all starts in one country, Kazakhstan, the world's biggest producer. And what they're doing right now is about to send some serious shockwaves through the entire energy world. You're gonna want to see this. First, just look at this number, -8 million pounds. That's how much uranium Kazatomprom, the state-owned giant in Kazakhstan, is literally taking off the table for 2026. Now, to put that in perspective, that's about 5% of the entire planet's primary supply, just gone. So the big question is, why on earth would they do that? Now, the official line you see here from the CEO is that, the market just isn't strong enough for them to go all out. But let's be really clear, this is not a sign of weakness. This is a cold, calculated, strategic move by the biggest player in the game, and it's all because of a massive change happening inside Kazakhstan itself.
And that brings us right to the heart of the matter, a complete overhaul of how Kazakhstan taxes the minerals pulled out of its ground. And I'm not talking about some minor little tweak here. This is a fundamental game changer, and it's forcing uranium producers to completely rethink how they do business.
This timeline really shows you how fast things are changing. I mean, until recently, it was super simple, a flat 6% tax. Then, in 2025, that bumps up to 9%. But the real earthquake, man, that hits in January 2026. That's when this new, way more complex system kicks in, one that's tied to both how much you produce and the market price.
So let's break this down. The first part of this new tax is all about volume. And as you can see, the rate just climbs and climbs. A small-time operation? They pay just 4%. But a huge mine, one pumping out over 4,000 tons, bam! They get slammed with an 18% rate. The message from the government couldn't be clearer. The bigger you are, the bigger our cut is.
And it doesn't stop there. On top of that volume tax, they've added a whole other layer, price-based surcharges. So as the price of uranium goes up, so does the tax rate. If prices skyrocket past $110 a pound, producers have to cough up an extra 2.5%. This creates this powerful incentive for them not to flood the market when prices are high, because the government's just going to take a bigger and bigger slice of the pie.
So you've got to ask, how does the world's biggest producer react to all this? Well, they respond with a total shift in philosophy. It's no longer about just pumping out as many pounds of uranium as humanly possible. Now, it's all about maximizing value, maximizing profit. It's a whole new strategy of discipline.
Their fancy term for it is a market-centric approach. So what does that actually mean? Well, in plain English, they're now choosing to produce less uranium on purpose. See, by keeping supply tight, they figure they can help push prices higher, which helps offset those new taxes and ultimately leads to a better bottom line.
And hey, don't just take my word for it. Listen to this from the CEO of Cameco, their biggest global competitor. He's saying this new tax basically wipes out Kazakhstan's single biggest advantage, its super low production costs. All of a sudden, digging uranium out of the ground in Kazakhstan could cost just as much as it does in Canada. That is a massive, massive shift. Now, as you can imagine, this new game plan is already sending some serious waves across the market. I mean, when a player this big makes a move this bold, it's bound to cause some chaos. And we're already seeing the short-term jitters and the long-term consequences play out. And this is where things get a little weird, right? You have this contradiction. In the short term, a temporary flood of exports from Kazakhstan actually pushed prices down for a bit. But that's just noise. It's masking the real, much bigger signal. The world is barreling towards a serious supply shortage, and this production cut just threw a whole lot of gasoline on that fire.
You can even see this hesitation in the financial markets. The Sprott Physical Uranium Trust, this is a huge fund that just buys and holds physical uranium. It started trading at a discount. That means its stock price was actually less than the value of the uranium it holds. It's a classic sign that some investors are getting nervous and are kind of sitting on the sidelines, waiting for the dust to settle.
But while some investors are hesitating, the experts, they're not. Just look at these price forecasts from a financial giant like Citi. They see prices hitting nearly $100 by the end of this year and pushing all the way to $110 in 2025. The consensus is pretty clear. With less supply from the top dog, prices really only have one direction to go, and that's up.
Okay, so we've been talking all about supply this whole time. But that's only half the story, right? Because on the other side of this equation, you have demand. And demand is growing at a pace that is just relentless. This supply cut is happening at the exact same time the world is realizing it needs more uranium than ever before.
It's really being driven by this perfect storm of three huge forces.
You've got the global push to decarbonize, which makes nuclear power look really attractive. You've got countries desperate for energy security in a pretty unstable world. And then you have the new kid on the block, the absolutely mind-blowing energy demand from the AI and data center boom.
And this quote right here from another CEO in the industry, it just ties everything together perfectly. Tech giants like Microsoft are now getting directly involved with nuclear power. Why? Because they know it's the only reliable, carbon-free way to power the future of artificial intelligence. Uranium isn't just a utility fuel anymore, it's becoming a critical technology metal. So this is where we land. On one side, you have this soaring, unstoppable, tech-driven demand, and on the other, you have the world's #1 supplier deliberately turning down the taps to play for value, not volume. It leaves us with one pretty big, provocative question. As Kazakhstan squeezes the market for its own benefit, who is ultimately going to pay the price for powering our future?